In this video, you will learn about the tax deductibility of expenses. Both SE Pastries Private Limited and BB Bakery Private Limited incur expenses in the course of running their businesses. Do you know that some business expenses are tax deductible while some are not? Let's take a closer look at how we determine if a business expense is tax deductible. This is important because business expenses that qualify for tax deduction will reduce your taxable income and the amount of tax that you need to pay. For business expenses to be tax deductible, all the following 4 conditions must be met. First, the expenses must be wholly and exclusively incurred in the production of income. Private or domestic expenses are not allowed for tax deductions. Second, the expenses must be revenue and not capital in nature. These are expenses incurred to run your day-to-day business operations such as supplies, utilities, and rental. Third, the expenses must be incurred. This means that the legal liability to pay has crystallized regardless of the date of actual payment of the money. In other words, it cannot be a contingent liability or an estimated amount. Lastly, the expenses must not be prohibited from deduction under the Income Tax Act. There are certain expenses that are specifically prohibited under Section 15 of the Income Tax Act. Common examples include private car expenses such as maintenance of S-plated cars as well as fines and penalties. To better understand these conditions, let us look at some common business expenses. Both SE Pastries and BB Bakery pay salaries to their employees. These salaries are tax deductible as they are wholly and exclusively incurred in the production of the company's income. BB Bakery is doing so well that the director, Bobby, decides to reward himself and go on a vacation with his family. All the expenses incurred for the vacation are paid for by his company. However, these expenses are not tax deductible as these are private in nature. They are not wholly and exclusively incurred in the production of the company's income. BB Bakery has incurred legal and professional fees to acquire a new shop. The new shop is a capital asset and forms a permanent structure of the business. As the legal and professional fees are incurred in respect of a capital asset, they are capital in nature and not tax deductible. On the other hand, Selina, director of SE Pastries Private Limited, rents her shop. The rental expenses incurred by SE Pastries are tax deductible. Why is this so? This is because the rental expenses are revenue in nature and they form part of the day-to-day operating expenses of Selina's company. Bobby estimates that a small percentage of BB Bakery's raw materials will expire based on his past experiences. As such, he makes a general provision for stock obsolescence. BB Bakery cannot claim a tax deduction for such a provision as this is an estimated amount. SE Pastries has been fined by the CPF board for the late CPF contributions for its employees. SE Pastries cannot claim a tax deduction on fines and penalties as these expenses are specifically prohibited under Section 15 of the Income Tax Act. Let's recap. In order for business expenses to be tax deductible, all the following conditions must be met. The expenses must be wholly and exclusively incurred in the production of income. The expenses must be revenue in nature. The expenses must be incurred. The expenses must not be prohibited under the Income Tax Act. Private and domestic expenses, along with those expenses incurred to acquire capital assets, are not tax deductible. You may visit the IRAS website or contact us for more information.